Risk premium perspective, there is a little bit of concern there about complacency. Where do you see that?
Well, across all asset classes, to be honest, more remarkable is credit. I would say across the board, being on govies, but also in corporate credits across, the junk or investment grade. I see a lot of complacency in the level of risk premium that investors are getting for the effective risk that they are taking.
Enough to cause alarm?
Not alarm, because, to be honest, I think that trends seems to last for much longer than we expected and we expect. And therefore, it's too early to say that if this is alarming or not. But, of course, we have to pay attention to that.
What are you hearing from clients right now? And what are they coming to you and asking for?
I guess we see a little bit more of willingness to deploy cash, but that hasn't really changed from the beginning of the year. We measure a little bit. Our indicator is cash balances with the bank, and we have been running for the last 4 or 5 years at the high 20s, and now we are going down to the mid 20s. So it's good news, right. But a little bit more willingness to deploy money and invest money in equities than in bonds or in any other asset classes. Still looking for diversification. The conviction level is not very high, to be honest.
Really?
So, yeah, go ahead. But one of the you said diversification, and one of the things that we didn't get to talk about in the magazine was cryptocurrencies. Is anybody coming to you and asking for more Bitcoin? People are more curious than really willing to invest.
Yeah. I don't think that there is any meaningful desire by high net worth individuals to take big bets on this kind of phenomenon.
And are they curious right now? And what's your sort of house view on cryptocurrencies at UBS?
On cryptocurrencies, at the end of the day, we believe that existing currencies may move into becoming more of a cryptocurrency, and something that make it much easier for intermediaries, for clients to exchange services and pay for services. Don't really believe that there is much room for the creation of new currencies if there is no real backing for hard and credible issuer of that currency.
You're saying that billionaires don't want to speculate with Bitcoin at this stage?
It doesn't look like, it's definitely premature to do that.
The other issue that we're talking about right now is monetary policy, and perhaps no more importantly than the impact the Fed is going to have on retracing stimulus. How concerned are you by leadership change at the Federal Reserve?
Well, not overly concerned. I do think that at the end of the day, there is a sense of, also last time we had a change, there was a high degree of continuity. I don't believe that if there is any change, we need to see if there is any change. But if there is a change, I'm not so sure that anybody has an interest to do something that is disruptive. So the market is already pricing the probability or the expectations that you may see half a point, even 3/4 of a point hike in the future. And I would say that probably even equity markets are implying this kind of potential hikes. I don't expect the Fed to, to move aggressively. They have a nice path of being able to exit by just, by the fact that a lot of the bonds they hold is going to expire, and they're going to be able to contract the balance sheet smoothly. One
of the wild cards here, though, is a US president that isn't shy about sharing his views on monetary policy as well, if that occurs to him. Are you worried about the independence of the Fed going forward? Well,
I think that, usually when you look at this kind of political intervention, not only in this country, but generally in the world, they may attract the contrary reaction of people trying to show that they are independent, and therefore I don't think it's a smart move for politicians to interfere in central banking monetary policy.
And when you think about that policy specifically, is there anything that a change excites you? The prospect of a change excites you? Like, how would it benefit your business?
No, I don't think that. We are not overly focused on those kind of leadership changes. I think that the angle that really is matter for us is not necessarily monetary policy per se. Is more if there is any implication to the oversight of the prudential part of what the Fed or any central banks is doing to our industry.
Right.
And I think that the path there seems to be taken, and therefore I don't really expect any major changes.
How much time do you actually spend thinking about this stuff?
Well, unfortunately, still too much, to be honest. I think that if I look at managing the macro and geopolitical picture, is for everybody an issue.
Yeah.
Regulation and how regulation may or may not continue to evolve or involve is a major topic for us still. So finalization of the so-called Basel IV rules is still something that we need to understand fully, and we also need to understand what does it mean, deregulation in this country.
Yeah.
I want to ask you a bit about how you've crafted the business, reshaped the business as well over the last 6 years, because one of the great comments I think that came out of the interview is when you said actually there's still not the right perception of you as an asset manager, and actually you're either the most expensive investment bank out there or you're the cheapest asset manager, and I love that idea. What's it going to take for the media, for investors actually to accurately reflect the shape and the balance that you've now found at UBS?
Ultimately, to be honest, is really up to us. First of all, we don't want to be either one or the other, but what I meant is also to recognize that the capital allocation and the business mix has changed. We still have a very important investment bank that is instrumental and very important also to fulfill our desire to be the leading wealth manager in the world. But at the end of the day, is how can we translate the cash flow that we generate today into capital returns? And in the last few years,
in the share price as well.
Exactly. So I mean, investors are waiting for the time in which the capital build-up to fulfill regulatory requirements is over, and the cost associated with legacy matters is addressed. I believe that we are in a good path, and we are almost there, and actually we are there. Now people need to start to see the cash flow coming back through dividends or share buyback, and I'm confident in the foreseeable future we will be able to sustain our desire to be reclassified.
So you're 6 years into the strategic overhaul, which pivoted and really doubled down on wealth management. These 6 years and the past decade have really been defined by regulation. What do you see the next 6 years, next 10 years? What are the forces that will define that time?
Regulation will continue to play a role, but not as significant as technology. Of course, 10 years from now, we're going to, I don't know if we're going to sit here, but so somebody is going to sit here and look back and look at the last 10 years and say, look at the amount of changes we went through because of technology. And all of them are, in my point of view, net for the positive. So I think that we're going to have an industry that is going to be much more efficient and effective in the way we use our cost and financial resources. We're going to have a better service to our clients, done also in a cheaper way. So, and the industry really needs to find this balance between creating cost advantage that in order to rebuild up decent returns as an industry, pass some of those savings to clients, and ultimately also the benefits to shareholders.
But as we kind of introduced you, we made that point, and you talked about it in the article, that you expect to see further consolidation, not necessarily on front office, but actually in back office. And whether we're talking about consolidation or technology and the changes that creates, it is going to mean job losses. How many, what proportion are we talking about over what time period?
Job losses or people changing their job. First of all, in the at least in Europe and also partially in this country, but in general, we're gonna go through in the next 10 years a huge amount of demographic contractions. I mean, we're gonna have more people retiring in our bank, and the choices will be how do we replace those people. So, in general, in all countries, there is a lack of demography, positive trends, right? So, lack of demography. There is a resistance on immigration.
Yes.
And therefore, we need technology to step in and fill the gap of the demographic trends. And so some of the jobs that we lose are people that are going to retire in any case in the next 10 years. And actually, the baby boomer effect will start to kick in very rapidly in the next 10 years. So I'm not overly concerned about job losses per se. Of course, we're going to have some job losses. And that's the reason why we also train our people. We need to make investments within our own organizations, but also our own people needs to invest time in becoming more agile for the future and be competitive in the working place.